Hey everyone, welcome in to another daily editorial here on the KE Report. We're chatting with Jordan Roy-Byrne, founder and editor of The Daily Gold. Now, Jordan, let's look into next year and more focus, I want to at least, on the underlying precious metals stocks. We talk a lot about precious metals and we always throw in the precious metals prices and then dive down into the stocks, but overall, look, I've heard a lot of optimistic comments at the end of the year saying gold was one of the better performing assets. The problem is you dive down into the stocks, and I know a lot of people that hold a wide range of gold stocks, majority of those are down and have struggled. There's still a lot of stocks out there that need to raise money, that are having a lot of trouble, quite frankly, just coming up with work programs next year. So the focus on the precious metal stocks, Jordan, what can actually drive these stocks higher and have the underlying gold stocks actually outperform the market?
Well, at the risk of being short of word, I guess I'd say more buyers, which is obvious. I mean, more buyers and fewer sellers. And I think that we're going to get more buyers. I think if you look at where we are in the macro cycle, and I think if you look at, we have some technical improvements in the stocks. The macro cycle is going to be better for gold. It's also going to be better for the stocks. I mean, a lot of people don't talk about fundamentals for miners. And, we know that miners typically outperform gold at the beginning of a cycle because when you get later in a cycle, you have oil going up, you have other commodities going up, you have input costs start rising. And so even though inflation is still going to be a problem, I think it's going to be slower over the next year or two as the economy goes into a recession and then tries to recover. And that's exactly the time when you start to see miners actually outperform the metals because it makes fundamental sense. So there's that. In addition to that, if and when we see gold break above 2050 or 2100, that's going to be really significant. That's going to drive a lot more money into the sector. It's going to drive more money into the stocks. It'll flow down to the juniors. So I think there's a lot of good things that are coming for our sector, and specifically the miners as well as the juniors. So I'm not worried about there needing to be some kind of a catalyst or waiting around for more buying to come into the juniors. I think we just have to be a little patient. Let's just let the days, weeks, and months go by because conditions they're already favorable for our sector, and they're going to become more and more favorable as the new year comes and goes on, in my opinion.
Well, Jordan, you've mentioned in the last couple interviews that you see a larger secular bull market starting to set up now and that we're just at the early stages of it. And typically those are pretty long in duration. At the beginning of a bull market, you just mentioned there in this initial comment that really that's when you start seeing miners run because they immediately can recognize those on their margins, or if they've got a development project, their economics immediately get a lift from the higher metals prices. And at that point in the cycle, maybe the other commodities and other input costs haven't risen as much. But we're in a situation where we've had really high inflation the last couple of years. Do you still expect that when the secular bull market really starts getting some traction, that the producers and developers will get that initial lift, considering the inflationary backdrop we have?
Yes, and the answer is really math. Because if we're looking at what happened in the last 2.5 years or so, almost the last 3 years now, but let's call it the last 2.5 years or so, going back to the March 2020 low, or even a little bit before that, because remember, gold actually broke out in 2019 when the Fed started cutting rates. And if you look at inflation then it hadn't started to move up yet. It was still, I don't want to say it was decreasing or declining, but I think you catch my drift. The problem is what happened is by the time gold peaked in the summer of 2020, that's when inflation really started picking up. Like if you look at the statistics, I think the rate of inflation was still below 2% then. Then it really started moving higher aggressively. So I'm thinking of a chart that I have saved somewhere, and it showed the miners' costs. And so the problem is that you think about that peak in August of 2020. So your top line there, the gold price, was above 2,000. That steadily was coming down over the quarters that followed. Meanwhile, the costs, the input costs, those really began to accelerate right around the time the gold price peaked. So costs in the last 2 years, essentially, they've increased significantly. And so the gold price hasn't made a new high. It's corrected a little bit since then. So that's why margins came down considerably. Now, if we think about the top line, if gold is able to break out and make a new all-time high, we know it's really going to run. There's a measured upside target of 3,000. So there's real potential on the top line for that to really move, because this comment aside, miners do really outperform when the market breaks out or when the gold price breaks out. I mean, it's obvious. It's the top line. It breaks out. It runs after that. So you're adding on the top line there. But also, if we're looking at costs right now, which is also important, the economy is kind of rolling over. The rate of inflation is coming down. In my opinion, over the next 12, 18, maybe even 24 months, we're not going to see that much upside pressure on costs. We've already seen a lot of pressure. We know that the rate of inflation is going to come down somewhat, and that inflation itself, it might not really start to pick up and accelerate for another 18 to 24 months or so. And so that's why miners are in a really like a sweet spot, a really good window here over the next 12, 18, 24 months, where costs are not going to go up that much. They might go up a little bit, while at the same time, we have the chance that gold could break out, run to 3,000. That's how you're going to get a huge increase in margins, which is good for the entire sector, good for producers, obviously, good for those development projects that you asked about. So that's how I kind of envision, based on math and fundamentals, what could happen over the next 12, 18, 24 months.
Okay, so you do want to see the majors run a bit more in their stock price. Do you think that actually encourages them to take over more companies then? Is that what helps the juniors?
Well, yes, that helps the juniors, among other things, because I will say what helps the juniors is gold breaking out, more money coming into the sector. And yes, it can go into the majors first and the larger juniors, and then it filters down. But with respect to acquisitions, if money is coming into the majors, their stocks are going up significantly. They're really performing really, really well. Then they have to use their stocks as currency to acquire more assets. It's just, we always see this every cycle, every time there's a bull market. It's even true for larger juniors and mid-tier companies. When they're doing really, really well and they're richly valued, they can use that stock to acquire cheaper assets. So I think that will happen, and we'll see more M&A, as the bull market really gets recognized. But yeah, what will help the juniors? It's obvious. It's a bull market. In addition to that, it's also doing good work, making new discoveries, adding value to their projects. All those things will help the juniors.
Well, Jordan, another question I have is kind of based on what we were talking about before we started recording today, and that is how speculative funds chase the things that are doing well. So we saw that happen in different sectors, whether it's the meme stocks or whether they were chasing the cannabis stocks in the past or the cryptocurrencies the last couple of years. But we've seen it in the resource sector. We saw people over the last couple of years chase the uranium stocks, chase the lithium stocks, because that's where the action was. And you made the case that really that's the same kind of thing that could start happening in the precious metal space in the next 2 years. I'd love you to unpack that idea about how the speculative funds will come here when we see the breakout.
Yes, they buy what's going up. They're momentum investors, trend followers, chasers, whatever you want to call them. And, just looking at various commodity charts and ratio charts, we see gold against commodities has broken its downtrend. That's moving up nicely now. That's a key breakout, in my opinion. It makes sense with the macro cycle. This is the time you want to get into gold first and foremost. And then secondly, I would say silver, because it does have that economic component. Versus if you look at a lot of other commodities, they made really strong moves and they were performing really well while gold and silver were correcting. Lithium is one that seems to be extremely popular, but when I'm looking at the lithium ETF, it's broken down. It looks pretty ugly. So I would not want to have my money there, in addition to some other commodities where, technically they look ugly, or it's just not the time, in my opinion, based on the macro cycle. So, I mean, assuming I'm right about this and, we do get into a real bull market here for gold and silver, I mean, anybody who's been in this sector for, more than a couple of years, they've seen this happen before. We will see the funds and, momentum funds and all that. I mean, all that capital is going to come in and chase these junior stocks and other stocks higher as this bull market gets, recognized and verified, which I think you'd see that happen with gold making a major breakout above 2050 or 2100.
So does this all happen early next year, Jordan, or are we going to have to wait? Is this going to be more of a sideways consolidation move and then a lift higher? General time frame, do you have an idea there?
Well, I don't have a crystal ball. I mean, if I really knew the answer, I'd be on a boat somewhere. But my sense is, I think that with respect to gold breaking out, if you look at the last, 15 years or so, various breakouts in gold have occurred around the time the Fed has started to cut interest rates. So that's one. I mean, you have these various catalysts that we can watch for. Number one for me is the S&P breaking below about 3,800. That's the 40-month moving average. I mean, in the last 4 or 5 days, it's kind of holding above 3,800. Maybe it's able to rally in the very short term, but we see the S&P break below that. Then we see the S&P testing, 35, 3,600, the recent low. Those are a couple of things to look for as far as catalysts. The bigger one will be when the Fed stops and when the Fed has to cut rates. So I think that the Fed will have to cut rates. I mean, I'd be surprised if it was after the middle of the year. But again, I'm just guessing here. I could be wrong. But that's essentially my guess would be that we could see gold. I don't know. Is it going to break 2050 or 1900 when the Fed starts cutting rates and then it'll keep running? I mean, it could be something like that. That's my sense. Probably when the Fed has to start cutting rates. But before that, if we see the S&P break below 3,800 and then threaten to break below 3,500, the recent low, that's going to be another catalyst for gold, especially where you should see gold performing really, really well in real terms and money moving into gold at expense of the stock market. So I think those would be the things, or at least that's what I'm thinking about as far as this coming year.
All right, Jordan, we'll wrap it up here. So an optimistic outlook for next year. I know us as well as our listeners would love to see that move higher and simply just more interest coming into the precious metal stocks. A few things need to happen for that, but it has been a nice recovery at the end of the year. Let's see what next year holds. Jordan, thank you as always for your time, buddy. It's been a pleasure chatting with you throughout the year. I look forward to covering the markets and the metals in 2023 with you. Have a very happy new year, Jordan. We'll chat in the new year.